All right, today we're going to tear into a real breakout story. We're looking at Artivion, a medical device company that just dropped an earnings report so powerful it sent its stock into the stratosphere. So let's get into the anatomy of this move, figure out exactly what drove it and what it might mean for the future. So get this, a 24.4% jump in a single day. A move like that isn't just random market chatter. That's the market fundamentally rethinking what this company is worth. So the real questions are, what did Wall Street suddenly see that it was missing before? And is there still more upside here?
Okay, so let's dig into the numbers that really lit the fuse on this thing. And let me tell you, this wasn't just them squeaking by. This was a complete and total outperformance across every single metric that matters.
What's really incredible here is the scale of this beat. Just look at the earnings per share, the EPS, 24 cents. The street was looking for around 11. That's more than double. They just blew it out of the water. Revenue also came in strong, well ahead of estimates. But the real jaw-dropper for me? Adjusted EBITDA. That's your core profitability, right? It's up a whopping 33% year over year. That's the kind of explosive growth that wakes everybody up.
Okay, this chart right here, this is the whole ballgame. This is what gets investors so excited. It's all about something called operating leverage. Management's been saying for a while now, hey, we're going to grow our profits about twice as fast as our sales. And, well, here it is, proof positive. Revenue growth of 14% and profit growth of 33%. This is them delivering on that promise, big time. It shows the business is getting way more profitable as it scales.
So you got to ask, right? Where is all this juice coming from? Well, this isn't some one-hit wonder. This is about a portfolio that's really hitting its stride and is being led by two key product lines that are just firing on all cylinders.
And if you look closer, the growth is really concentrated in the spots that matter most. Their high-margin Onyx mechanical heart valves and their stent grafts business, both rocketing up over 20%. Come on, that's not just growth, that's serious acceleration. Sure, the other parts of the business are stable, but the real story, the thing moving the needle, is this explosive momentum right here.
So what's the secret sauce here? What's really fueling this fire? It turns out, it's this awesome halo effect. They recently launched a new device in the US called AMDs, and it's creating this amazing cross-selling synergy. The CEO, Pat Mackin, even said it on the call. He was like, "We thought there'd be some cross-selling benefit. It was a little more profound than I thought it would be." You just love to hear that kind of pleasant surprise straight from the top.
Look, a quarter this good doesn't just happen by accident, This is the payoff from a really smart, really deliberate strategy. Management has just been methodically executing, checking off all the right boxes for investors, and it all starts with shoring up the company's finances. So let's break down their playbook. It really comes down to three big wins. First up, they cleaned up the balance sheet, paid down almost $100 million in debt. That's huge for taking risk off the table. Next, they pushed their pipeline forward, got a key FDA green light for a new clinical trial, which is fantastic news. And finally, they basically put their money where their mouth is. They raised their guidance for the whole year, signaling that this strength isn't just a one-time thing. It's textbook execution.
Okay, so after a monster quarter like that, the big question is, what now? Where do we go from here? Let's put it all together and make a call on this thing.
All right, here's our take. We are rating Artivion a firm outperform. These guys have shown they can execute. Plain and simple. They've got multiple engines firing at once, and that margin expansion story, wow. We think the market is still playing catch-up to just how good the fundamentals are here.
And now for our favorite part, the outrageous but plausible call. Here's the core idea. We think the market still doesn't fully get how profitable this company is becoming. So what should you be watching for? Two things really. Any good news from that ARTIZEN trial, and proof that this AMGS momentum is for real, maybe even another beat and raise quarter. So the call is this. We expect Artivion to keep crushing its peers in the med device space. As more people catch on to this profit growth story, we think there's still plenty of room for the stock to get re-rated higher.
Okay, and you know the drill. This is just our analysis. It's for informational purposes. It is absolutely not financial advice. You've got to do your own homework.